Hey everybody, it's Craig back with another Mortgage Minute, and I'm excited today because I've got Mr. Jamie McMurray with McMurray Fox and Associates on here with me. Hey Jamie, how's it going?
Great, Craig. How are you?
Doing good, doing good. So Jamie and I have known each other a long time, but the reason and he's a super cool guy. So I mean, I would love just talking to him regardless, but I brought him on here because he is a certified public accountant. That sounds really fancy. What do I have to
You
do to get
know,
those
uh, the AI failed the CPA exam, just in case you
details?
knew. So it
So,
must be really smart.
yeah, absolutely. So, I did not know that actually. That's funny. So the reason Jamie's on here, in all seriousness, is there's a lot of people that have purchased their home in, say, the last year or so, or maybe just a little over a year, who are thinking, man, I don't know, this may not be the perfect home for me. I might want to buy another home. And one question that seems to come up a lot with people is, well, I heard there's something called capital gains tax. And so, but I don't know what that means. So I thought, you know what, this would be a good topic to really kind of talk about just a little bit. So Jamie, in general, explain what's the purpose behind capital gains tax? What is that?
So capital gains tax is if you own a property, say a rental property for over a year, you get long-term capital gains. So you
Okay.
hear about it all the time about capital gains, and you get it, and it's 15% rate unless you make a significant amount on that rental property. And at that point, it goes up to 20%. But generally, it's 15% on long term gain versus your ordinary income rate, which would probably be average of 24, can be all the way up to 37%. So that is the
Because
big,
that would be considered on the top, right? So
yep.
whatever your highest tax
So,
bracket is, that
yep.
tax essentially be using that, right? Okay.
And if you own it less than a year, you pay ordinary income. So that's why the key is owning your real estate property over a year and holding on to it so that you get and sell it after a year so you get the 15% rate. But that would be if you were dealing with rental properties. But it's different if it's a personal residence. And I think what you were describing seemed to be as a personal residence
No question.
scenario. So with that case, there was a law passed and it was actually saved back with the Trump administration tax law that it's if you own your house 2 out of the last 5 years, then and you've lived in it 2 out of the last 5 years, then you can exclude up to 250,000 a person from your tax capital gain from that 15% or the whatever your ordinary income rate is. You have to have lived in it though. The 2 year is the key, and they say two lived in it 2 out of the last 5. So that is where the big misconception that I have seen over the years comes in. Most people think you have to make it to 2 years to get any of that $250,000 credit. That is not true. They take the number of days that you have lived in it, and you of that $250,000 credit, you get part of it. So say these aren't exact numbers, but if
Yeah,
you live in over a year, you could have up to $125,000 of that credit against your gain. You still
really.
report the gain, but the way you report it is that you show it on your tax return, but then you take that exclusion and you have to tell them how many days you've lived in the house, and there's a formula to it, and it comes up to that. But it's not I have to live in it 2 years or I don't get the credit. Now yep, the downside of that is you can only use the exemption every 2 years, so you can't do this every year
Right.
because there is a 2 year wait period to do it again. So we've
Okay.
seen a lot. For example, we see a lot of builders that build their own houses and then they'll live in it 2 years and then sell it. They can't sell it after a year and go build them another house and do it a year every year. Do this. So you have to do the credit has. But if you haven't used the exemption in the last 2 years and you're in a house that you say you bought your first home and you wanted to move up to to a bigger house, a house that fits your family better, then you would definitely be able to sell that house and take that credit, even if it hasn't been the full 2 years. You'd get that pro rata share of that credit. And if you're married, it's 500,000 because you each get 250,000
Okay.
for that.
All right. So just real quick, I've owned my house for 1 year and 5 days. Okay. And my gain on that house is going to be $50,000 and I want to sell it. You're telling me that if I haven't used that exemption in the prior 2 years, that for the most part, I'm probably not going to pay a capital gains tax. Is that pretty fair?
Correct. And that
Wow.
is where most people don't know that. I've had lots of realtors call me with that question. And the neat part about the last tax legislation that passed under the Trump law, it had moved to 5 out of the last 7 years you had to live there. And the last minute in that tax law, it was changed back to 2 out of the last 5 years. It was saved by the Realtors Association people in DC. So it was a great save because, but again, yeah, you're exactly right. So we would then have to ask more questions in preparing the return, because then you have to figure the number of days you have lived in it. It's been your primary residence. And then that formula lets you know how much of that is tax exempt. If it's not all tax exempt, say you made 150,000 and you only had 125,000 of the credit, you're only paying capital gains on 25,000. You've owned it over a year and at 15% rate.
And listen, I'm embarrassed to say this. I didn't realize that was the case. So I've been telling people if they haven't owned it for 2 years, they could be subject to, which I guess is still true. But I've been saying it more along the lines of, yeah, you probably will be subject to capital gains, when I've probably been saying that wrong. So now I want to make sure people that are watching this understand, because I also think this is a confusing thing that people have. The gain is what you actually gain on the property. So again, if I say this wrong, you tell me. But if I bought a house, I'm just use easy numbers. If I bought a house for 400,000 and ignore all the costs just for a quick second, and I sell it for 450, and I had a $200,000 mortgage on it, I might clear $250,000. That doesn't mean that's my gain. My gain is 50,000. Is that right? It's just,
it is what you make on the house. Mortgages don't matter
yes,
in capital gain scenarios. So the big thing is you take for the sale, it would be the sales price minus obviously the closing cost.
sure.
And then the basis is the original purchase price plus all the improvements, major improvements that you have made. So if you've had to put a new roof on, new windows, some of these, older houses that you've renovated, all of that is part of your basis. And I have that misconception as well of, oh, I can go back and find all of those receipts or get the information from the contractor that helped me with that, so that we add that and limit that basis. I mean, raise that basis so we limit the taxable gain.
Yeah. I mean, for most people that are watching this right now, if you bought your home in the past year, I'd say the chances that your actual gain being above 125,000 are not real good. So I think what we're saying here is, if you're someone that says, man, I do want to sell my house, or maybe I have to sell my house because of circumstances, life circumstances, don't assume that you're for sure going to have a capital gains. And by all means, don't not look into it because you're afraid you're going to have capital gains, because you may not, right? Like it might be, because again, I didn't know that. So I mean, I would have thought the same thing. Let me tell you, or let me ask you about one more, I think is a misconception, but you tell me if I'm right or wrong, because I get this all the time. Hey, I know I might be subject to a capital gains tax, but I plan on putting all of my proceeds into the next purchase, so that gets me out of the capital gains tax. Is that true, or is that a misconception?
It's a misconception when it comes to personal residence, and I'll tell you where it came from.
Okay.
Years ago, there was a law that you had a one-time exemption before this law, before the 2 out of the last 5 years, that you could sell your house at 55 as you're getting closer to retirement, and you could downsize. And then you could have a one-time exemption as long as you put the money back in, but you had an exemption out of that. So that since that time, the conception has always been there that you got to reinvest the
Yes.
money into what you have done. And I know where it comes back from, and that law changed, you know, I won't even guess the number of years, but it goes back to that. There was an exemption there versus having everybody having this exemption of after 2 years or portions of 2 years living there. So that's where that started. But it is a big misconception. I get that question all the time.
Yeah.
Why, do I have to reinvest it? You do not. And so what we have seen, the most common scenario we have seen is that older couple that have lived in a house for 30, 40, 50 years that have done improvements over a long period of time, being able to sell their property and make, when they may have had 50 to 100,000 in that property and sell it for 7 or 800,000 to be able to take that money as part of their retirement plan. They don't have to reinvest it. They were reinvested into spent half of it on a zero lot line condo or something that's more, accessible for them at their age and as they're getting older. And that's been a great scenario because it's been part of, along with their retirement plans and their IRAs, it's really helped them to have cash on the side. And they didn't, in most of those cases, they still didn't make, if they were married jointly, they didn't make 500,000 in capital gains, so they paid no tax.
Yeah. So the moral of the story is you don't have to reinvest, all of you can if you want. I mean, for some people that's the right move for them. But I think a lot of times here's what happens, is someone will think they have to do that. And then they come to someone like me and we ask the question, well, how much do you want to put down? They go, well, I want to put everything down. And I'm guilty of this too. We don't stop and go, really, why? Because, and for some of those people, they might say, well, because I know I have to avoid capital gains. And so if you're watching this, just know you don't have to do that. Maybe you want to do that. That's fine. Listen, obviously you want to get it right when it comes to any kind of tax scenario. So Jamie, if somebody's watching this and they're like, man, I need to talk to somebody because I just want to make sure I'm good. I've worked with you for many years, so you're awesome to work with. How could someone get in touch with you? What's the best way for somebody to reach out to you?
We have both offices in Hendersonville and Gallatin. To reach me directly, it would be the Hendersonville office, and that number is 615-824-2724. You can also email me. It's jamie@mcmurrayassociates.com. And what we would do initially is just set up an appointment, have you come in and talk through this scenario, and then we can then work on a tax estimate so you don't have any surprises after you sell that property. If you're considering selling that property, get in touch with us. We would love to talk that through with you so you can really know what actual cash you're going to have at the end if you do own any capital gain, which we would love to help with the scenario. The biggest mistake we see is people don't report their home sale. They get a 1099, they get a 1099-S showing that they sold their house for $450,000, and the IRS just sends them a bill.
Yeah,
because they don't know that's the form they received. So they have to, then you have to go back and fix it. So it's a lot easier to do that on the front end and do it correctly. Take advantage of the tax exemption, the 250,000 or the 500 for the married couples, and it would benefit you to contact us.
that's awesome. Well, hey, listen, if you're watching this and you want to get pre-approved because you're thinking, hey, I want to sell my house and maybe buy another one, give us a call, 615-498-5626. Jamie, thanks for hanging out. I appreciate it.
Hey, thanks, Craig. And Craig's one of the best. I would highly endorse him as well. Thank you.
Appreciate that.
All right.